Okay, welcome everyone. Which housing market in the world has the most millionaires? Which market in the world has the most billionaires? We're going to take a look at that. Santa Clara County median home price now hits $2 million. And if you've been watching my monthly market updates, you've been seeing that trend and you've been seeing that number already a few weeks ago. Which area in the Bay or which area in the country has become the undisputed leader in AI tech and funding dollars? It's not going to be a surprise. Mortgage rates finally fall as the housing market faces a slow spring. Is it really slow? We're going to talk about this point, as not all markets across the country are experiencing the same thing. And last but not least, we're going to talk about doom but not loop. Has San Francisco dodged the worst case scenario when it comes to this idea that things will go infinitely bad? All right, my name is Spencer Su, and in the last 5 years, I've helped over 250 people just like you guys with your moves when it comes to the real estate goals. And this year alone, we've been able to help over 30 plus families so far with their moves. So if you're thinking about buying, selling, or investing, you got to talk to us. Our contact details are below. We can go over a strategy call, 408-547-4590. And let's go over the headline articles of the week. These 50 global housing markets have the most millionaires and billionaires. Now, New York is still number one at 349 millionaires, 349,000 millionaires. There's 60 billionaires, but the Bay Area is number two, 305,000 millionaires, 68 billionaires. Now, in terms of the last 10 years in growth of millionaires, Austin had actually the biggest number, mainly because they quite frankly had a lot of people move from a lot of the coast into Austin back in the day. I think things will change a little bit as people have moved back to other respective areas. But the Bay Area, though, has been at 82%, followed by Miami, Dallas, and Washington, D.C. So what I always find incredible about the stat is if you are in a growth mindset, either from chasing careers, chasing businesses, chasing opportunities, and you're trying to hedge your bet as to where can I have the highest likely success, follow where the money is. So people, as you can see, generally when it comes to finance, when it comes to fashion, they go to New York City. When it comes to things in tech, biotech, also a good amount of finance. There's a lot of hedge funds here that I work with. There's a lot of people in private equity, in investment banking that are also in the Bay, or they're also here. They come to the Bay Area. So there's other global hubs that are suitable options if they're in the respective fields in those regions. But the idea is follow where the money is. There's so much opportunity all around the Bay Area. So if you're watching from somewhere else, trying to consider to move here, or if you decide to settle here, yes, things are more expensive here, but they're more expensive for a reason, right? If the median sales price of a home now in Santa Clara County is $2 million, don't complain about the cost of housing. Be more impressed in terms of what people are able to afford to be able to buy such a place because of the generous stock options that most people have, because of the general ability that their compensation is tied with many bonuses and stock RSUs, restricted stock units that are granted from companies. These are all ways for people to be able to afford this as a medium. And this is not just executives. This is for a lot of individuals that are watching this. I've been delighted to help so many of you guys with your moves. And so this doesn't mean you need to go get a $2 million plus home as your first home, but just be mindful. This is why things are what they are. And because rates are higher, doesn't prevent people from slowing down. It just means they actually may put a more sizable amount down if they want to keep their loan a little bit less. Because think about this. The reason why you see more cash offers now when interest rates are higher is because everybody's doing the math on their side. If the rates are at 6.75%, people always ask themselves, can I actually outperform this over the long period of time? You're not going to be able to outperform that in the money market accounts, right? The treasury yields are at 5%, but you may be able to outperform that if you invest in the stock market for a long time. But even then, it's not as simple. Versus when rates were lower, people should have maximized their loans. They should have not accelerated the payoff of their loans. Like, just because you're debt-free does not mean that was the right approach to have. So because rates are higher, but because the stock market has done so well, a lot of people have been divesting from their stocks and putting a more sizable amount in terms of their down payments. So that is super important to talk about when it comes to how people are funneling things. Now, the other thing I want to point out here is mortgage rates finally fall as the housing market faces a slow spring. It didn't actually face a slow spring at all when it came to the Bay Area, because this stat is something that happens across the entire country. Now, a lot of other markets, especially because most other markets outside of the Bay and maybe in Seattle, most people don't have much compensation tied to the general stock market or their companies at all. They're mostly just a salary. Maybe they get a bonus. But because the stock market has done so well, that's why you see the activity still be so high. And what happens when home prices are actually higher? It actually does not prevent less listings. It actually accelerates the amount of listings that come. It's actually when prices drop and all things being equal, that's when actually there's less transactions. Because think about this. If you were a seller of a home and your rate typically, or over 80% plus of people that have homes in the Bay Area are under 4%, they would hold on to it more. But if the prices are good, they may say, look, this is actually a pretty darn good price. The rate is what it is. We were thinking about selling. Mentally, this sounds like a great number. I'm going to sell. And so that's why you saw of the April numbers that we had the same amount of new listings that we had back in 2022, and only less than 10% left from less than 2021. And those are very, 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 very busy years, some of the busiest transaction volume years that we have ever had. And so that gives you a little bit of perspective as to the mentality of homeowners, right? It's not just giving up the rate. I think a lot of people have already understood, like, that's not going to get there anytime soon. Certainly, if people can hold on to it, they would love to. But most don't want to be a landlord. And so it comes to a time to decide to sell. The other component is this, by the way. If there was a homeowner that bought a place, like bought a new place. So a homeowner buys a new place. They have a certain amount of time before they can sell that place, if it was a primary, to have capital gains exclusions up to $500,000 if you're a married couple. So some people are waiting for that 2-year period to decide, should we sell now and to take advantage of that? Or is this going to be a really long-term now rental play? So there are some people testing out the waters too, because they're also seeing, hey, look, where are the prices at? Should we do this? And that's a huge factor, because if you're able to sell things at $500,000 profit without paying taxes because of the home, like the primary home capital gains exclusions, that's a big deal. That's a very significant amount. That's like what, 20% plus. In this case, $100,000 that you are no longer having to pay taxes. Of course, confirm it with your CPA, but that is all public information related to the capital gains exclusion. So you will see some of that activity, because think about it. The rates have been the same level now for the last 18 months. It's been in the range between as low as 6.1% to as high as 7.6%. Right now is kind of in the middle of that range. So as people feel like, look, that's not really getting better, the time is up, time has went by, we may decide to want to sell it because the numbers are still good. If the numbers were not good, then they wouldn't sell it. They just keep it as a rental. There's less desire to want to take advantage of a hotter market. So there's a little bit of things like that that actually helps with inventory. So every area is obviously different, but especially in the Bay Area, that has been what's going on. It has been a lot of homes come on the market. Now, be mindful, the stock market has increased 17% in the last 6 months. And so has housing prices for single family. So if you're looking at homes before and you're not seeing much, it has nothing to do with low inventory. It has everything to do of searching in the right areas of the budget that has sold. And my suggestion for every one of you, and I tell every one of my clients, it's a part of my approach that I've changed. I tell everybody, do not stop looking at what homes are on the market. Like, just stop that altogether. If you're new, stop that. That's not going to do you any good. And the reason is because you don't know what the homes are actually, you don't really know what the homes are actually going to sell for, right? Especially until you make some offers or you really do a more detailed analysis of what has sold in the area. Instead, just do the reverse filter. Change the filter that you use, whether you go on my website, you use Zillow, Redfin, Trulia, any other portal. There's always a filter that you can see what has sold in the last 30 days. Look at that. filter under your budget, put in your parameters, 3-bed, 2-bath, 1,500 plus square feet, whatever it may be. Then now you can see the clusters that are open. Focus on those areas because those areas are where you're going to be successful, right? At the end of the day, you, myself, everyone else has no control over how an agent and the seller wants to list the home. But what you do know, especially if you've been watching this every week or you've been watching this every month on my market update, you will also see that home prices have been a lot flatter now. So it's very predictable. It's not a drop, but it's flatter, which means what has sold in those last 30 days will be likely what the home will sell for today if it came back on the market or look anything similar to that. And then you work with someone like myself that will help you do a lot more detailed analysis about condition, location, competition, these different things to really fine tune the number. But all of these things are what will help you understand where is the real buy box. Stop making the complaints about low inventory. It's not low inventory. It's not looking at the right place. And so the earlier you do that, the better you are off because then you'll be fishing in the right areas. Okay. So next, let's talk about this. SF Bay Area has become the undisputed leader in AI tech and funding dollars. I mean, it is just incredible the amount of money. And so this has a big part of like the why the stock market is doing well. So a combination of things. As the stock market has done well, a lot of the venture funds have also become more bullish because they see potential more opportunities for exits, right? Either acquisitions or through going IPO. And so you can just see the number of companies and the amount of money that's being spent in the Bay Area. Take a look at this. Quarterly AI funding amounts, Bay Area versus the entire rest of the world. You can see the Bay Area, $3.7 billion so far in 2024 as a quarter investment. You can see the end of 2023, absolutely incredible, $12.5 billion. My goodness. Like just throughout, like the Bay Area, this little region of equivalent of 7-8 million people has this kind of capital that's being poured in. Now, to be fair, most of it is not necessarily going to people as much as what we would hope. But in general, it's going to a lot of into NVIDIA chips and into a lot of infrastructure plays. But nevertheless, it's still incredible to see. They're still hiring a lot of people. They will need to be expanding what they're doing, whether it's on the research side, engineering side, and eventually, hopefully, on the sales and marketing side of things. But it's just so incredible to see like all of this activity and all of this innovation continues to be going in the same area. And because this is because it's so early, and because this is not a established market, people are hands on deck to ramp this up as much as possible because this could be a generational change. And because of that people are all moving back. They want to be part of the action. They want to network with other people. They want to be around other people. They want to see what they're doing. They may want to do partnerships. Their venture may not work. They may join another one, right? There's so much activity in such a small area. And so if you're not involved with it, it's certainly super exciting. And there's just so much activity happening of just things going on in the Bay. And this is part of the reason why, even though there's been a good amount of mismanagement from the city level side of things, that they kind of dodged this bullet for now. Right now, there's still a lot of things that can still unfold in terms of how commercial real estate will be impacted because not all the buildings are getting leased out, right? This is not what we experienced back in the pre-COVID levels in terms of people wanting to work in those offices. There's a lot of people that work in offices, but they work in different type of offices, usually they're really nice ones. So you look at like Mission Bay, these are really newer ones, nicer buildings. A lot of people, they would prefer, if you're going to rent out space, you may as well rent out the best ones, especially when they're at a discount anyways, right? So these are all factors as to what gets rented out, but there's a lot that are just suffering and just doing very, very poorly. And so those are going through big haircuts right now, 80% off what it used to be worth, 90% off. And that still will keep unfolding through the years, or actually through the months/few years. We will see how that ultimately plays things out. But in general, there's still a lot of people that continue to go into the city. They spend money in the city, right? I mean, just go any weeknight. Like there's a lot of commercial strips outside like the core downtown that are just really lively, right? Go to Lower Pack Heights, go to around Japantown. Like there's just so much action all throughout San Francisco that people are still spending their money. It's not inexpensive for dining out there, by the way, but they're still having a good time, spending the money, stimulating the local economy. It's just so much activity, so much going on out there. And so the energy is definitely a whole lot better than it was a year or two ago. And that's still why people from all over, they continue to move to the city, whether they're even from the Bay, they move from other parts of the Bay to San Francisco, or they come from other parts of the country or the world, and they decide to settle down somewhere. Okay, so that ends our week. We're going to have one more next week, and then I'm going to be off for 2 weeks out in Europe. So if you have any suggestions for me, I'm going to be going to Croatia, I'm going to be going to Greece, going to be in France. Leave in the comments below. Best restaurant, things to do. See you next one. Bye now.